Good morning, Jagendra Rana here. The topic for our discussion today is insurance broking in India. Insurance broking in India. The Indian insurance broking industry has evolved steadily alongside the economy. But the nature of risk itself has changed. Risks today are more complex, more interconnected, and evolve faster than ever before. It's no longer enough for brokers to simply arrange policies. Businesses now need brokers to act as strategic partners, helping them navigate growing uncertainty. Traditional broker models are no longer relevant. For a long time, brokers mainly focused on negotiating premiums and managing policy placements. So while those functions still mattered, they are no longer enough. At a recent industry conference in Mumbai, you could see that a clear shift in thinking was underway. Brokers must now bring strategic advice to the conversation, acting as trusted risk partners rather than the sales intermediaries. Lloyd's of London also stressed this point, describing insurance brokers as essential advisors who protect business resilience and reputations. Clients of today expect brokers to not just manage what is already known, but also help them prepare for what lies ahead. So when risks refuse to stay in their lanes, today's risks don't stay neatly in their own lanes. Cyber attacks, climate disasters, regulatory shifts, and supply chain disruptions are becoming increasingly interlinked. The Alliance Risk Barometer emphasizes that cyber crimes have now become one of the biggest worries for business globally. So cybercrime is expected to cost about $10.5 trillion a year by 2025. So in India too, the average cost of a data breach has jumped to approximately rupees 18 crore. Parallelly, natural disasters have also been causing massive destruction, and insured losses have been topping $100 billion annually for the past 4 years. Clearly, risk no longer fit into tidy categories. A single occurrence can unleash financial, operational, and reputational chaos all at once. Managing risk in isolation is no longer an option. Today's challenges are too connected, too complex. Companies need a smarter and more integrated way of thinking about risk, one that looks ahead and sees the bigger picture. The ship that created global waves, the Suez Canal blockage of 2021, comes to mind and serves as a power example. The lone ship getting stuck caused a global meltdown in trade, running up an estimated $400 million in cost. Every single hour. What initially seemed like a shipping problem soon uncovered serious weaknesses across global supply chains. That was a wake-up call. Risks are rarely just about one thing anymore. One size doesn't fit all anymore. Given how specific risks have become, generic insurance products no longer serve businesses well. An IT firm focused on cyber security and data protection faces very different challenges from a mining company dealing with environmental regulations and commodity price swings. So brokers must now customize risk solutions to the realities of the of each client's sector and operations. Customized advice is no longer a value add, it's a necessity. Expertise is the new currency. To deliver truly relevant solutions, brokers need deep expertise in specific industries. For those who develop detailed sector knowledge are already leading the way. A recent Willis Tower Watson report highlighted that sectors focused risk solutions consistently produce better results for clients. Specializations allows brokers to anticipate emerging risks, offer smarter strategies, and negotiate more effective cover. Clients trust brokers who genuinely understand the pressure of their work, not those who rely on off-the-shelf approaches. Numbers tell tales if you listen. Data analytics has become a critical tool for brokers. With better use of data, brokers can shift from reactive to predictive advice. So instead of waiting for claims to reveal risk gaps, brokers can now identify early warning signals, early warning signs, and suggest preemptive action. For example, analytics might reveal patterns of operational accidents, allowing businesses to improve safety before incidents occur. Smart use of data strengthens a broker's ability to deliver tailored and forward-looking advice that helps clients stay ahead of risk. Then beyond transactions, building knowledge hubs. As specialization and data becomes central, brokers firms themselves must change. Future broking organizations will operate more like expert advisory hubs. Teams will include risk engineers, claim experts, compliance specialists, and sector advisors. So instead of acting only at renewal times, brokers will engage continuously with clients, providing regular risk updates, insights, and strategic support. This new model will strengthen trust and make brokers essential partners across the full risk life cycle. Algorithms need advisors too. There's no doubt that technology has made broking faster and more accurate. The artificial intelligence and advanced analytics are changing the way brokers evaluate and manage risks. But at the end of the day, human judgment still plays a crucial role. The best brokers don't see technology as a substitute. They use it as a tool to enhance their work. True understanding comes from blending hard data with real world experience, empathy, and intuition. Risk is changing, so must be. The role of the broker is undergoing a fundamental shift. It's no longer about simply facilitating transactions. Clients need dependable advisors who can anticipate challenges, design solutions that reflect their unique exposure, and offer support through uncertainty. So brokers who build deep expertise, use data wisely, and act as genuine strategic partners will be the ones shaping the future of the industry. So ongoing reinvention of insurance distribution puts brokers and independent agencies in an excellent position to remain relevant and successful for far into the future. So with the increasing sophistication of analytics and AI, the rise of online purchasing, and an aging workforce make many carriers are reconfiguring sales channels and considering reducing their reliance on exclusive per capita sales. Per capita sales. So the Insurance Brokers Association of India projects insurance broking sector to capture a 45% market share by 2030, following increased insurance penetration and the demand for insurance products. Over the past couple of years, the Indian insurance industry has seen a series of significant transformations and new developments. Thank you.